Well, welcome everyone to this Oxford Global Society discussion on whether the dollar hegemony is collapsing. The Oxford Global Society was set up in 2021, and its purposes, or among its purposes, are to facilitate discussions in an independent way on contemporary political, economic, and social issues, drawing on a diverse set of global positions. And I think today's session perfectly encapsulates that aim, with speakers from South America, China, and the UK and Europe. My name is Chris Decker. I'm a fellow at the Oxford Global Society and at the University of Oxford. My work is generally at the microeconomic level, focused on regulation and competition economics, but today's topic interests me for two reasons. First, I'm interested in the question of whether the dollar's dominant position is, if you like, collapsing. In a way, this is, in one sense, this is a competition question. You know, what are the alternatives or the substitutes to the dollar? Does the dollar hold an enduring position of market power? So that's one reason why I'm interested in today's discussion. The second reason I'm interested in the discussion is because I've recently done a lot of work on the regulation of payment systems, particularly emerging private payment systems. And some of these have huge potential. You know, Facebook, Meta's now abandoned proposal for a digital currency known as Libra would claim to be able to reach 2 billion unbanked people around the world. So it's a huge potential there. So why are we talking about this today? The topic about the dollar's dominant position and the collapse of the dollar is definitely not a new one and has been debated at various times over the last 50 years. And at various points, potential competitors have included the Deutschmark or the yen or the euro, or most recently, the Chinese renminbi. However, many of those debates really have focused on this sort of wholesale abandonment or replacement of the dollar, as a full substitute for the dollar, if you like, coming and displacing it. But I think the more interesting question, and something I hope we'll get into the discussion today, is whether we're talking about a more gradual shift away from a sort of single currency to a more multi-currency system, a gradual loss of market share over time. And so I think that's why we're having this discussion today. Before I hand over to our distinguished panel of speakers, I'd like to take a few minutes just to kickstart the discussion by focusing on what I think are four foundational questions to hope frame and shape the comments that will follow. And the questions are these: why do we need an international currency? What's the purpose of an international currency? Why has the US dollar held a unique position and a high market share? Why might that situation have arisen? And why is its position potentially being undermined? Why do people think this position is being undermined? So if we start with the first question, why do we need an international currency? Well, I think from an economic perspective, and certainly from a competition economic perspective, it's effectively an efficiency argument. An international currency reduces transaction costs. It allows for greater transactions and greater interactions. In short, a common international currency can exploit network externalities. So it allows for greater gains from trade in much the same way as having a common language does. And so while this brings benefits, it can also have some adverse effects in terms of competition and choice. These strong network externalities can create a winner-takes-all dynamic. The more users that want to use the dollar, the more people that need to use the dollar. There's a positive spiral. And this can make switching to alternatives quite difficult. And without gaining scale, many other currencies just can't compete. And an implication of this is that the US dollar, potentially, and those who operate the single currency have enormous power. And the arguments here are very similar to the arguments that you see in relation to large digital platforms and why they may need to be regulated, etc. So the first point is to say we need an international currency effectively because it does reduce these transaction costs. It increases gains from trade and exploits these network externalities. My second question is then, what's the purpose of an international currency? What do you need to do? What do you need to fulfill to be an international currency? Well, the classic sort of technical answer is that an international currency must fulfill three functions. It must be a store of value. It has to have this investment function. It has to be attractive to be held as an international reserve by central banks. It has to be a safe investment. Secondly, any international currency has to fulfill the medium of exchange function, has to be able to be used as a transaction currency, has to allow for foreign exchange trading using the currency. And thirdly, any international currency has to be held as a unit of account, a common reference unit, a benchmark. And this is important for invoicing, but it's also important because it allows smaller countries to anchor themselves to this bigger currency, this bigger benchmark, if you like. And it's fairly well established that the US dollar fulfills all of these functions: a store of value, a medium of exchange, and unit of account. It has done this over the past 50 years at least. So my fourth question then was, why has the US currency held a unique position as an international currency? Why does it have such a high market share? Well, we're going to explore some of these points, I think, in the presentations that follow. But in the broader literature, there are really 6 reasons that are put forward. First, it has arguably an incumbency advantage. As I said before, it has there's a certain, these network externalities exist, and these sort of lock countries into the currency. They're self-reinforcing. It creates this positive spiral. The more users, the more that need to use the currency. So there's this incumbency advantage. Secondly, it occupies this position of dominance, if you like, because of the sheer economic size of the US. It's a very big and a powerful economy. Third, the currency markets in the US are broad, deep, resilient, mature, open, and highly liquid. The US has sophisticated and open financial markets that offer a wide range of services, and they give a high protection of property rights. So this creates a high degree of transactional liquidity, which lowers transaction costs and lowers barriers to participation, increases participation. So that's a third reason why the US currency has this high market share, or has held this high market share traditionally. Fourth, there's a high level of confidence in the institutions traditionally in the US. The independent Federal Reserve Bank, independent courts, all of these things create stability. And equally, traditionally, there's been high levels of stability in terms of election and division of powers in the US political system. So there's high level of confidence in the institutions. A fifth factor which may have contributed to the US dollar's dominant position is the successful macroeconomic management. The US economy has been able to sustain relatively low inflation and, more critically, to deal with inflationary changes over time. That's another important factor. And sixth are geopolitical factors. The sixth factor that may have contributed to the US dollar's dominant position is geopolitical factors, global leadership and foreign policy, and the geopolitical ambitions of the US state. Some also argue that the military strength of the US actually assists the dollar in its position as a dominant currency. It provides confidence to nervous central banks, if you like. So these are some of the reasons why the US currency has arguably held a unique position as an international currency and a very high market share. But this brings me to my last question and my last point before I'll hand over to the speakers. And this is to say, why might this position of the US dollar as an international currency be changing? Why might it be under threat? What's potentially destabilizing this position of dominance? Again, we're going to cover some of these points, I think, in the presentations. But for me, there are 5 reasons that that you tend to see in the literature and that are expressed. The first is a perceived lack of control and voice. So Jeffrey Frieden at Harvard argues that effectively there's a deal between the US state and other states. And that deal is that the US dollar is accepted in expectation that the US will consider the impact of its own policy on the rest of the world. But he goes on to argue that that doesn't really happen. The Federal Reserve takes account of US conditions and largely ignores the rest of the world in favor of its principles, which are the US government and the American voter. So one of the reasons we see why the US dollar may be losing its position of dominance is this lack of control of voice. A second reason is US domestic politics. In particular, the US debt position, which is at an all-time high as a percentage of GDP, and the lack of partisan agreement on US debt ceilings. There's this continual threat or potential threat, if you like, of US Treasury default on debt, and this leading to a flight from a dollar. So there's US domestic politics also, and the unpredictability, if you like, of US domestic politics feeds into this question about, do we really want to be relying on the US dollar as the dominant international currency? A third reason why the share of the US dollar may be declining is the declining share of US economy in terms of world GDP. It is still the strongest economy, but it's gone from 40% of world GDP in 1960 to 25% in 2020. And in 2020, the BRICS economies accounted for about 25% of global GDP. So you're seeing a shift in terms of global GDP and the US position there. We've also seen a changing geopolitical situation. I think this is something that some of our speakers will talk about, concerns about the weaponization of the dollar, the imposition of sanctions, first against Iran and more recently against Russia, and the dollar's role in that and payment systems. So that's another reason why we may be seeing a changing position of the dollar. And then a final reason is the global decline in cash, in the use of cash, and the emergence, as I said earlier, of private digital currencies. So around the world, many economies are now going cashless. In Canada and Norway, it's about 5% of transactions are cash only. And this means that payment systems become entirely in the hands of private entities, including banks, card associations, and privately owned digital currencies. So that's another factor that may be contributing to the destabilization or the changing position of the US dollar. So with these introductory remarks, I'd now like to hand over to our speakers. And our first speaker is going to be Professor Robert Wade, who is a professor of global political economy at the London School of Economics. Robert has worked at the Institute of Development Studies at Sussex University, the World Bank, the US Congress, Princeton, MIT, and Brown University. He has an extensive list of publications and awards, including the Leontief Prize for advancing the frontiers of economic thought. He's a founding member of the Financial Times Economists Forum and was described as one of the 50 of the world's most influential economists. So Robert, question for you, is the hegemony of the US dollar collapsing?
Okay, well, thanks very much. I'm not sure that I can add that much to your very succinct overview of the subject, but let me try. So I think that the word de-dollarization, ugly though it is, could be a candidate for the word of the year 2023, because the world is awash with claims about the end of American financial supremacy, the end of dollar hegemony. And some of this has been prompted, as Chris just indicated, by unease and outrage at the US government's overt weaponization. And by the way, weaponization could be another candidate for Word of the Year 2023. The government's weaponization of the dollar and the dollar payment system in the past few years to sanction enemies like Iran, Cuba, Venezuela, Afghanistan, North Korea, and China. And then in 2022, early 22, the US took this weaponization to a new level when it used the dollar payment system to freeze Russia's access to some $300 billion in liquid foreign exchange reserves in the wake of Russia's invasion of Ukraine. And now influential voices are urging that the US not just freeze Russia's access to these reserves, but actually appropriate them and give them to the government of Ukraine for post-war reconstruction. So those who think that their states might be subject to the same punishment have started to search anxiously for ways to escape dollar dominance. And even the European Union has shown signs of wanting to escape dollar dominance. For example, the German foreign minister has called for a new EU-based payment system independent of the US and of the SWIFT payment system that would not involve dollar payments. And the Brazilian finance minister in 2022 called for a South American international currency, beginning with the very unlikely coupling of Brazil and Argentina. And quite recently, President Lula and President Fernandez discussed the idea in some quite superficial way, but apparently enthusiastically. Unsurprisingly, the idea of this Brazil-Argentina currency going on to a South American international currency has got nowhere. at least so far. So there is all this talk, and then it is striking that this talk of the imminent decline of dollar dominance goes back at least to 1960, when economist Robert Triffin warned of what he said was, and this is a quote, the imminent threat to the once mighty US dollar. That was 1960. And of course, his reasons for this imminent threat came to be known as the Triffin dilemma. And then Charles Kindleberger declared in 1976 that, quote, the dollar is finished as an international money, unquote. And yet here we are 50 years after Kindleberger, and the dollar is not at all finished as international money. Nevertheless, talk of the imminent dollar decline continues. For example, President Putin forecast the beginning of the end, that's a quote, the beginning of the end of the dollar in June 2023. And the former president of Brazil, Dilma Rousseff, now the current chair of the New Development Bank in Shanghai, she pledges to, quote, find ways to avoid being dependent on a single currency. Well, that's the situation. My bottom line assessment is I think, consistent with Chris's, which is that the talk of de-dollarization has run far ahead of the current or near future reality. The dollar's hegemony is ailing, but it remains a very long way from ending. And I want to add my reasons, which overlap with Chris's reasons, but are not entirely the same, as to why, in particular for 5 reasons why the dollar hegemony is ailing, but it remains a long way from ending. And these reasons together make the point that is implied in Chris's reasons too, which is that the emergence of large-scale alternatives is fraught with great difficulties. So reason number 1 is just the sheer dominance of the dollar and the dollar payment system today, which is really striking. According to the Bank for International Settlements' latest triennial survey, the dollar remains the most used international currency by far. For example, it is part of 88% of all international transactions. And the very striking second point is that number, 88%, has barely changed since 1989. So for all the talk of dollar de-dollarization, there's been very little dollar de-dollarization so far. Just to repeat, it's currently 88% of all international transactions, and that number has barely come down from 1989. In the case of the euro is part of international transactions by the amount of 31%, the yen 17%, and as for the renminbi, it's only 7% involved in any international transactions, but that 7% is up from 4% in 2019. So that's the dollar's share of all international transactions. In terms of the dollar's share of global foreign exchange reserves, it's now about 60%, and that is down from 72% in 2000. And over this period, the share of the renminbi in global foreign exchange reserves rose from 0% in 2000 to 2.6% today. So in other words, the renminbi is not an important currency in global foreign exchange reserves. So that's the first reason, the sheer dominance of the dollar and the dollar payment system today. The second reason, and this echoes what Chris said, is that this dollar dominance rests on institutions which give the dollar system huge economies of scale, including the world's deepest, most liquid, and most open financial markets. The Chinese renminbi could be used on a significant scale as an international currency only if China opened its capital account. and Beijing has good reasons to resist doing that. I think it's striking that most Belt Road Initiative lending from China, which has been running at which amounts to roughly $1 trillion since 2013, most of this lending is denominated in US dollars, not in Chinese renminbi. So that's the second main reason. That is the institutional basis of the dollar system. And the third reason why any alternative is going to face huge difficulties is this. It's to do with the inherent limits on the growth of bilateral trade arrangements in which the partners trade with each other in their own national currency. There are inherent limits on the growth of these bilateral trade arrangements. It is true that there has been some growth in the use of national currencies in bilateral trade arrangements, but so far on a mostly cosmetic scale. As far as I understand, just as an example, in early 2023, Beijing and Brasilia announced that they would encourage transactions in Brazilian reals and Chinese renminbi. And then Delhi and Kuala Lumpur announced they would conduct trade in rupees, India's currency. And France now conducts, to my surprise, a fifth of its trade with China in renminbi. And then there's the case of Saudi Arabia, which I won't spend time on right now. And that is a rather more complicated case in which the Saudi Arabian government, and in particular the finance minister, have suggested that Saudi Arabia was open to using currencies other than the dollar in its oil contracts. And that sent quite a shock through US financial markets. But as far as I know, that move has not yet gone very far. So the general reason why one can expect these bilateral transactions in national currencies to be quite limited is this. Of course, if they did happen, that would speed up de-dollarization. But these bilateral transactions in national currencies will inevitably be constrained by the fact that there are surplus and deficit countries in these exchanges. And surplus countries accumulate monetary assets in the currencies of the deficit countries. And the surplus countries may be wary of accumulating these assets because of the risk of inconvertibility and depreciation. And then, on the other hand, deficit countries may worry that the surplus countries will dump their currencies in international currency markets in the search for safer assets. So the third reason is that for limits on de-dollarization is that the alternative of bilateral transactions in national currencies face these inherent limits. And then the fourth reason has to do with SDRs, special drawing rights. So the special drawing right is the only asset in existence which could plausibly be upgraded to function as an international currency without also being a national currency. This is the IMF special drawing rights. It represents a unit of account coordinated by the IMF, and in principle, it could play a role similar to the international currency called Bancor, which Keynes proposed at the Bretton Woods negotiations in 1944. And in principle, the IMF could be upgraded to a world central bank, similar to Keynes's International Clearing Union, to manage this international currency. But, of course, any such move would require wholesale reforms at the IMF, including to boost the share of votes held by developing countries, notably by China. The US has a veto over any such changes, is unlikely to agree, and the Europeans fiercely defend their gross overrepresentation in the governance of the IMF. But there's another reason why this use of the SDR, this upgrading of the SDR into an international currency is unlikely. And it's this, that only governments and multilateral development banks can hold SDRs. So countries will always end up converting their SDRs into a particular currency in order to make use of them. And that currency will be whatever is most useful to the country for borrowing and for trade invoicing. For example, most useful, it may be most useful to convert the SDRs into US dollars to service US debt and to buy other things from the US. So the bottom line point is that the special drawing right does not substitute for the use of a national currency, which is most likely to be in US dollars. And then my final point is this. It concerns the proposed BRICS currency. Within the BRICS coalition, Russia, which, as I said at the beginning, is deeply shocked by the US's freezing of some 300 billion of its liquid international reserves after its invasion of Ukraine, Russia has taken the lead in designing a BRICS international currency, initially to function as a unit of account in transactions between the BRICS, that is, not as a store of value and not as a medium of exchange, but as a unit of account, so that the prices of these transactions between the BRICS would not fluctuate with the dollar. Brazil's President Lula and also Brazil's finance ministry have come out in support of Russia's proposal. But on the other hand, Brazil's central bank is very quiet about it. And in fact, Brazil's central bank is very wary of Brazil going into any arrangements which would involve coordinating with other countries, especially with other BRICS, including, for example, in the contingent reserve arrangement, which the Brazil central bank has continued to block, to paralyze. And then, so that's Brazil's support coming from the president and the finance ministry. And also, China has supported the project for a BRICS currency, a BRICS unit of account in public, in a quiet kind of way. So the plan for this BRICS currency, but just to make clear, at the moment, they're just talking of it as a unit of account, not the other two functions of a currency. But the plan was discussed at the BRICS summit in August 2023. However, on the eve of the summit, India's foreign minister voiced opposition to the very idea of the BRICS currency, but without making clear what the reasons were. And my guess is that the reasons reflect India's tension with China. That is to say, if China supports this project, India is inclined to resist the project just because China supports. And then the other reason is because India, partly because of the tensions with China, is wanting to ally more closely and boost its trade with the US, and therefore sees a BRICS currency as somehow detracting from that objective. So just let me finish. A viable, this is on the point about the BRICS currency, a viable BRICS currency, even just as a unit of account, never mind the other two essential roles, looks to be many years down the road. And this is especially so because the BRICS will welcome several very, very disparate new partner states into their coalition in January 2024. So making agreement amongst this much more disparate group even more difficult than before. So let me end with Martin Sandbu of the Financial Times saying in a recent column, this is a quote, "Claims on the West will remain denominated in Western currencies and governed by its laws," unquote, implicitly for a long time ahead. So that's the end of my account. De-dollarization may become the word of the year, but there's not that much substance to it as far as I can see, at least at the moment.
Thank you so much, Robert, for that presentation, a very thorough and considered answer to the question. Let's turn now to Dr. Ming Zhang, who is speaking to us this evening, his time, from Beijing. Dr. Zhang is a senior fellow and deputy director of the Institute of Finance and Banking under the Chinese Academy of Social Science. He's also the deputy director of the National Institution for Finance and Development under the Chinese Academy of Social Science. His research covers international finance and macroeconomics, including cross-border capital flows. He has worked as a vice mayor and the chief economist at Securities, and also a fund manager in Japan. Dr. Zhang, I'm going to put the same question to you that I put to Robert, and I will put to Sonia. Is the US dollar's dominance under threat, do you think? You just muted, unfortunately.
Hi, everyone. I'm very happy to be here to attend this discussion. I have prepared a few slides, so let me share. Basically, about the question is another hegemony connection. I want to raise 4 points. The first point is that, generally speaking, the involvement of international real currency comes to a very slow process. But some impacts can accelerate the process, such as geopolitical conflict or the economic crisis. We often use the example about the roles of the pounds and US dollar. So it takes more than 50 years before the US dollar replace the role of the GP pounds. After the economic size, economic of the United States has surpassed the Great Britain. So it's a very slow process. But there is some new literature they argue that the transition period may be much shorter. For example, the Economist, they have some kind of research. They found that after the First World War, the US dollar already surpassed the pounds in some functions of international currencies. But the Great Recession has reversed this process. So after Great Recession, the pound status is much stronger, became much stronger than US dollar again. So in the very slow transition process, 2 factors play a very important role. One is the institutional inertia. After we get used to use some currencies, if there is no some important change, or for example, the cost rise much higher, we will continue to use the same currency. And also the network externality has played a very important role. However, just as I mentioned, some big geopolitical conflicts or some huge economic financial crisis may accelerate the transition process. So this is the current comparison of the major currencies and major countries. So you can see that US dollar still plays a very important role, and the pace of RMB translations tend to be very slow right now. For the reserve currency perspective, the ratio is just between 2% to 3%. So my second point is that I want to give you a case. The birth of the global financial crisis in the 2008 strengthened, not weakened, the status of the US dollar. For example, if you look at this chart, so this is the share of the US dollar in the global reserve currency. So you can see that in the decades after the birth of the global financial crisis, the ratio of the US dollar increased, and the ratio of the euro has declined after the breakout of the European sovereign debt crisis. Why? So there are 2 kinds of reasons. For the surface reasons, Christopher has mentioned that the recovery of the US economy was much faster than other advanced economies because the US government has used a very fast and expansionary fiscal monetary policy. And also the performance of the US stock market was stronger than other major markets. And in the decades after the burst of the global crisis, US dollar exchange rate rose against other major currencies. But also there are some deep current reasons. For example, as a central country, the United States could globalize its domestic financial costs, relying on the international status of US dollar and competitiveness of US financial markets. And also, we have noticed that after the crisis, the Fed has signed a series of new bilateral US swap lines with some major advanced economies, which increased the US dollar's role as an international currency. I want to argue that the same logic might apply after the COVID-19 pandemic. The third point I want to raise is that the weaponization of the US dollar after the Russian-Ukraine conflict might hurt the US dollar's status in the long run. We know that after crisis, the US government has frozen the foreign exchange reserves of Russia, so which means a targeted default of the US Treasury bonds. So this action may seriously hurt the US Treasury bonds status as the most important global safe assets. So right now, what is the real safe assets? The gold, the commodities, or other financial instruments? We don't know. And also, after this conflict, not all of the Russian financial institutions were kicked out from the SWIFT circle. So this also seriously hurts the SWIFT image as the global public goods. So not all of the big major countries began to find some other alternatives. They try to circumvent the SWIFT payment system. So right now, I mean, for the major country, so for the major countries which own a huge foreign exchange reserve, such as China, India, Saudi Arabia, they began to do two actions. The first, they want to increase the holdings of real safe assets, and also they also began to decrease the holding of the US Treasury bonds. And the second action is that they began to find some new alternatives. For example, China has begun to establish a new RMB-based international payment system, and also in Europe, they have also experiment to do it. My last comment is about the RMB internationalization. We have mentioned after 2009, a couple of years has passed, but right now the ratio of the RMB as an international currency is around just 2 or 3% in international settlement in the unit of account and also as a stock value. So the process is very gradual. So also the RMB internationalization has experienced some business cycles. For example, for the year of the 2009 to the year of the 2017, so it is a complete cycle. For the upper side, it is 2009 to 2015, and for the downside, it's 2015 to 2017. So in the first year cycle of the RMB internationalization, PBOC used the old trinity, which so I call it the old trinity strategy. First is encourage RMB settlement of cross-border trade and direct investment. Second, we try to develop some offshore RMB markets such as Hong Kong, Singapore, London, and New York. And the third is that PBOC began to sign some bilateral local currency swaps with other foreign central banks. From the year of the 2018, for my observation, the PBOC began to use some new strategy to promote RMB internationalization. We call them new trinity strategy. The first is that they try to develop RMB denominating commodity future market, for example, the oil future market in Shanghai. The second is that they try to open domestic financial market to the foreign institutional investors, because the domestic financial market can offer a diverse, more liquid financial assets, RMB financial assets with higher yields. And the third is that we began to cultivate real understanding for RMB border countries or the BRI countries. What is the real demand? I mean, it's not just some how to say just because you are appreciating these currencies, just because you have higher yields, I will hold you. If the situation reverse, I don't need you. If there is more trade collections and direct investment collections, so the demand will be more real and sticky. What is the sticky demand? Which is they will not be largely influenced by the short-term fluctuations of exchange rate or interest rate. For example, even RMB is depreciating on these other currencies, and right now, even the RMB's assets yields is lower than the yields of the US dollar financial products. People still want to hold some kind of the RMB. That's the sticky demand. So my conclusion is that I agree with you that even there is some signs the US dollar hegemony is collapsing, but it will going to be very slow and very gradual process. The key issue is that there is no other currencies which can replace the role of US dollar in the near future. Thank you.
Thank you so much, Dr. Zhang, for that excellent presentation and the very concrete examples of the US dollar's resilience, and also those points at the end about the recent attempts to try and cultivate demand for the renminbi in BRIC countries is really interesting as well. Before we turn to our final speaker, I should mention to the audience, if you have any questions that you want to put to the speakers or any points you want to raise, please put them in the chat and we'll deal with them at the end of the last presentation. Which brings me to our final presentation, which is by Ms. Sonia Russell, who has had a very distinguished career as an advisor and journalist across multiple countries. Her career in journalism spanned anchoring for the CNN World News from Washington, and reporting and presenting for ITV in London and Tokyo. She's an Argentine national, educated at Cambridge University, and her focus since 2001 is in Latin America, leading multi-country communications campaigns, consulting for the World Bank, and advising Fortune 500 companies and politicians. So, Sonia, you've got the final chance to answer the question. Is the US dollar dominance or hegemony under threat?
Thank you, Christopher. Well, the first thing I want to just say is that obviously I'm not an economist, not an expert in finance or currencies. So, and why am I here? And I really asked myself, what can I contribute to this discussion? And I thought about it. One region where the dollar is absolutely dominant is South America. But not many people have noticed that our main trading partner since 2010 is China, and by a very large margin in almost every country. So if you look at South America, it's a very good test case in will what is happening in trade and foreign investment actually translate and challenge the US currency as the dominant currency over time, or even the US as the dominant geopolitical power. So, and South America is a really good test case, really good bellwether, because over the centuries, if you look at it, we have tended to match what's happening with great power dominance. So I will be brief. I'm going to focus on three things. First, the dominance of the US dollar in South America. Where are we now? Secondly, the dominance of China as the main trading partner of South America. What's happened in the last decade? And lastly, the way we look at the US and China, partners or predators. So the first, the dominance of the US dollar in South America. The weaker the local currency, the more dysfunctional the economy, the more the dollar is the benchmark as the safe haven. So, for example, for me, the US dollar all my life has been like gravity. It's the invisible but ever-present force that grounds everything. Everything, what things are really worth, And that's no matter how much our own currencies bounce around and how fantastical their official value may be. So real estate, always measured in US dollars, contracts, usually done in US dollars in one form or another, our savings, if we can, we put them in US dollars, remittances that come from families obviously come in US dollars. And some countries even gave up having their own currency. If you think about Ecuador and Panama and El Salvador, simply moved to the US dollar. Argentina briefly moved to the US dollar from 1991 to 2002. And maybe again, if next Sunday Javier Milei wins the election, he talks about dollarizing again. And then there are exchange rates, which are always measured against the US dollar. So I have to share this example. Argentina, the country, we have 15 exchange rates. And just for your entertainment, there's the official one. Then there is the unofficial one, which normally would be called the black market one, but black market doesn't sound very nice, so we call it the blue. The blue is about 2 to 3 times the official one. Then we have the credit card dollar. If you're buying credit cards, you pay a different dollar rate. If you sell soybeans, which is one of our main commodities, you get a different dollar exchange rate. There's the Coldplay dollar. You like that. When Coldplay or Taylor Swift come, they pay them in a different dollar exchange rate. The Netflix dollar, if you happen to subscribe to Netflix or Spotify, that'll be a different exchange rate. And the most favorite one of all was the Qatar dollar. If you went to Qatar to follow us in the World Cup, you paid a totally different exchange rate. So there you have it. That's how crazy. So the basic line is the more unstable the economy, the more dysfunctional, the smaller the country, the more the US dollar is the benchmark. But at least in South America, currency hegemony has definitely followed geopolitical one. When I said we were a great bellwether for geopolitical trends, I really mean this. It's been for centuries. When Spain was the world's dominant superpower centuries ago, South America was there. And quite frankly, our gold and silver had quite a bit to do with that dominance. Then came the Industrial Revolution, the British Empire. Now, the British funded all our independence movements, but they didn't bother to make us colonies. They focused on trade and investment. South America was part of the unofficial empire, was linked commercially to Britain more than any other country, most investments, pound sterling. Then we get to the 20th century, and we of course know it was the United States, where their backyard, as they call us, and without doubt the US dollar was and still is dominant. But that can be changing. And it could be changing. The question is, will the renminbi or the yuan one day edge it out? And that would be because of trade. The second point. Not many people have noticed. I mean, you read a lot about Africa and China, but not many people noticed that China, since 2010, is by far our dominant trading partner. Also investor, mainly raw materials, infrastructure, energy. So I'll give you just a few examples so that you can have a sense of it. The main country, of course, is Brazil in South America. Oh, by the way, and the reason I'm saying South America and not Latin America, because Latin America includes Mexico, which has its US-Mexico-Canada free trade agreement that skews it to the US. But everybody else, let's look at it. Brazil to China, 30% of Brazil's exports go to China, 27% of its imports come from China. China is the main source at the moment of foreign direct investment in Brazil. Record number of infrastructure projects, very much to do with energy. Numbers, 2022, Brazil to China, Brazil exports $88 billion to China, iron ore and soy mainly. Imports $53 billion from China, semiconductor devices are the priority. And if you compare that to the US, same year, Brazil to the US is $30 billion, which is less than half of what's going to China, and $39 billion from the US. Then you take Chile, another important country. $30 billion to China, mostly copper, $27 billion back. To the US, exactly half. Second trading partner is the US, 15 billion compared to 30 to China. Peru, another great mining country, same thing, 17.5 billion. China's main trading partner, the US, is half, almost exactly, 8.5. There's one exception, Colombia. I can't figure it out why. It has the US first and China second. And I think I have to say, in all fairness, that that does not include Colombia's chief illegal export to the US, cocaine. I'm sure that would wildly skew the figures towards the US even more. But anyway, Argentina has more imports from China than elsewhere. And Uruguay, the best managed country in South America, China's the #1 country it exports to, and the US is third. We look at the Belt and Road Initiative, pretty much every single country in South America has signed up, -3. Brazil, Colombia, and Paraguay haven't. And Brazil is bound to join very quickly because Lula is much closer, more pragmatic towards China, as opposed to the previous man, Mr. Bolsonaro, who had an ideological issue with China. And that brings me to the third one, which is the favorite one, is the US and China. Do we see them as partners or predators? And let's think about it, we hear it from think tanks. Seen from South America, that is a really simplistic question, because you must remember, we ask the same question of the US and Europe. Spain, France, Germany, UK, even Finland. Is it a partner? Is it a predator? The United States, partner or predator? And you have to remember our history, because to put it simply, we have no history with China. Any investment by the US or Europe raises some suspicion, but China doesn't have that historical baggage. So if you take the centuries view, China's approach is much closer to what the British Empire did, which is you make sure the countries are a bit less attached geopolitically to the former superpower, and you just focus on trade and investment ties, becoming, an unofficial empire of suppliers and markets for goods. So for us, when we see Chinese company wanting access to our lithium, which is a big thing now in Argentina, Bolivia, and Chile, is it really any different from us, from the US or Germany wanting access to lithium or copper? And with export, agribusiness is our competitive advantage in many countries, especially the Southern Cone. And you have to remember that we face protectionism by US farmers and the European Union Common Agricultural Policy. So for us, China is actually a fair trader instead of one that blocks the trade in what we have a competitive advantage. So, and my other example, which you'll all remember, is partner or predator, is you remember the last couple of years, the US became very agitated by Huawei and 5G, and and quite honestly, that doesn't resonate very much in South America the way it does in the US or Europe. Because, there's that fear of potential control by a foreign superpower. Chinese companies are going to control key telecommunications with a strategic lever on the country. And, for us to read that, the US and UK or Spain or where, it almost makes us laugh. It's like the irony, like, welcome to our world, as if that's never happened in South America, done by those very countries. So for us, it wouldn't be the first time that we would face a more powerful country outside. And remember, banana republics began in our country, and that wasn't even a strategic asset. We're talking bananas here. So it's not to say that South America isn't alert, and that there may be concerns with, particularly with China, that there are secret deals and contracts with clauses, and there are even rumors of secret military bases, and, for example, Argentina, and it's all a mystery. You never know. In South America, there are so many conspiracy theories and wild rumors. The truth could always be more serious and wild, but we don't know. But what we do know is that we will remain very attractive for trade and investment for a reason that's often overlooked. Because other than Australia, we are just about the most peaceful continent on Earth. We have no wars, we have no civil wars, we have no ethnic rivalries, we have no religious tensions. It's amazing. A region that in the world's imagination is an afterthought or kind of a basket case, or is actually pretty much democratic and peaceful. And we have our problems, we know that, but they're not the problems of the Middle East. They're not the problems of Africa or the Indian subcontinent, or even Eastern Europe, which in the last 30 years has fought wars in Bosnia, Croatia, and now Ukraine. So my final thought is that it's not either or, but it sums up what both Dr. Zhang and Professor Wade were saying, is that it's both and. Like, it may be adios hegemony, but in fact, we're already living in a world of two superpowers, one with growing influence, one with waning influence. And because we're here, we're talking about the dollar. It's like on the street, there is no question, savings, real estate, everyday valuation. The dollar is like the English language of popular culture. Soft power takes so much longer to shift than hard power because of all the points that you both made, or the three of you made, actually. If you think about it, we still speak Spanish. They left 200 years ago. English will be the second language. It's easier than Mandarin. It's the language of tech. And the United States will have massive influence. And that does translate into us understanding the dollar as the unit of currency. It's where we aspire to study. It's where we go on holiday. It's the entertainment of the stream. And the United States, which will link us more, the US is becoming more Latino. Miami is already the unofficial capital of Latin America. So we're becoming closer, not further apart, because they're changing. And now that Messi plays in the US, maybe even the US will discover football, which is a whole other issue, because this discussion is about the dollar. So the US dollar is the benchmark. It's the only currency we trust with our savings, and it trusts to agree on the value of everything across, no matter how crazy our countries. But when it comes to business, trade, and investment, China is welcome in South America. China is respected in South America. Respect includes a degree of fear, because we don't understand China, and we need to, because China's not just our future, China's actually our present. And as much as the US dollar and its benchmark power. So we are already living, I think, what you were all pointing out, which is a world where you're seeing that transition very gradually. And that's just the view from the ground.
Thank you so much, Sonia. That's really fascinating, and I learned quite a bit there. I didn't realize the extent of Chinese investment in South America, so that was interesting. I also learned a lot about the arbitrage opportunities for the US dollar in Argentina. Maybe I'll move over there and try something there. Excellent. Well, thank you all. We're now going to have about 15 minutes for questions. We've got 1 or 2 questions in the chat. In fact, we've got 1 question in the chat put by someone called Alexander Smith. And I'll read out firstly the essence of the first question, which really links the position of the US dollar to the US military strength. And I think the essence of the question is this. The US is very strong military, very strong military presence. If the dollar's status in global trade changes to the point where other currencies compete, there'll be a mismatch between the US military strength, on the one hand, and the strength of the dollar. And what do you think the consequences of this mismatch will be, both in financial terms and in terms of citizens' everyday life? Do you think that will be an issue? I suppose that's the prior question. Is there an issue if there's a mismatch between the US, a very powerful military country, and the US dollar perhaps no longer being the dominant international currency? So does anybody have any immediate reactions to that question? I mean, I think it's something that I picked up in my introductory comments in terms of why the US dollar is seen to be such a dominant currency, is this idea of the global position of the US, both politically, but also militarily. And people argue actually that the strength, this reinforces the dominance of the US dollar because, some central banks gain comfort from the fact that the US has a strong military and can defend itself if it has to.
Well, to be just to be more explicit, the US has some 700 overseas military bases spread out amongst 80 countries, number one. And number two, the US military budget is greater than the military budgets of the next 10 countries put together. So, I mean, the US is just overwhelmingly dominant in the military domain, and China has been trying to gain influence not by military alliances but by these infrastructure alliances. But they are nothing like as powerful in terms of generating confidence in the American state than the American military budget is, I would suggest.
Thank you. Dr. Zhang, Sonia, do you have a response to that question, or are you?
I want to raise a point. I think one of the strengths of the US dollar is that there is lots of excellent transnational companies in US, and the large share of the revenues are generally from the outside of the United States. So strong military means that they have the power to maintain the safety of their overseas investment and international assets. So I think the very strong international companies, strong military power, they are the 2 pillars of the US dollar strength in the history.
Okay, well, maybe I. Sorry, come on.
Chris, could I ask Dr. Zhang a question, a really important question, which spans this whole discussion? Can I ask Dr. Zhang a question?
Please do. Please do.
Yeah. Okay. So it is an item of conventional wisdom that ever since the 1950s, that the dollar, the status of the dollar, gives the United States a quote exorbitant privilege, an exorbitant privilege. But some people, including Michael Pettis, for example, who is an American heterodox economist based at Peking University, argues that, on the contrary, the dollar is an exorbitant burden to the United States. And so the question then is, what is the thinking in the Chinese government? This is the question to Dr. Zhang. What is the thinking in the Chinese government as to whether China really does aspire to having the renminbi as an international currency? What are the thinking about the benefits and the costs? That is, would it be an exorbitant privilege for China, or would it be an exorbitant burden for China, or would it be both?
Okay, so this is a very important question. So I will try to answer. So China's government began to promote the RMB nationalization after the burst of the global financial crisis. So before the global financial crisis, for example, since the year of the 2000, after China entered WTO, China began to maintain a trade surplus in its balance of payments. So we have both current account surplus and capital account surplus. And also the Chinese government want to avoid a very fast appreciation of the RMB against the US dollar. So the result is that we accumulate the huge amount of the foreign exchange reserve. So at the peak, there is $4 trillion. So when we accumulate the foreign exchange reserve, there is a lot of the risks and costs. For example, if the US dollar depreciates against other currencies such as euro and Japanese yen, there will be a loss of the market value of our US dollar denominated financial assets. And also, the investment yields of the Chinese foreign exchange reserve is very low because we invested largely on the US treasury bonds. The yield is very low. Compared with there's a lot of FDI companies, their yields in China is very high. And the third is that PBOC purchased the US dollars with RMB. So the other side of the coin, when PBOC began to accumulate the foreign exchange reserve, they have released a lot of RMB. So there will be a risk of excess liquidity in China, which will push up the inflation and asset bubbles. So China must sterilize the RMB inflow. The PBOC began to issue the central bank bills, but when the scales increase, the yields of the central bank bills rise, which will cause financial cost for the central bank of China. And then they began to raise the required ratio, which means they just passed the cost to the commercial banks. And finally, they will pass the cost to the Chinese households. So I mean, why China want to internationalize the RMB? Because first, we want to slow down the accumulation of the foreign exchange reserve, so to minimize the cost along with it. And the second, because Chinese export and import companies, they face lots of the, for example, the transaction cost and the exchange risk. So they want to minimize their exchange risk. So, which means we should internalize our domestic currency. And also, if we internationalize the RMB, the Chinese companies can issue debts in RMB, so which can also help them to minimize the foreign exchange costs. So there are benefits, But for the disadvantages or for the cost, for the burdens of the RMB transition, for example, just as mentioned by Robert, Chinese government must liberalize capital account. But if there is some kind of financial vulnerabilities in domestic market, you should be very cautious to liberalize capital account. Otherwise, maybe there will be some negative spiral between the RMB depreciation and the cash outflow. And second is that if there is a developed offshore market, which means lots of the RMB can flow in and flow out, it is difficult for the PBOC to operate monetary policies. So it's difficult for them to control the level of the RMB interest rate. So this is also a potential cost. And the third is that for international currency, so you must provide enough RMB for the rest of the world. So by what method? For example, United States, they use the current account deficit to export the US dollars to the other countries. So they will face a terrific dilemma. But for China, we have a huge trade surplus. Yeah. So it's difficult for us to export RMB in the current account. So maybe the infrastructure investment along the Belt and Road initiatives could be kind of potential channel for us to export the RMB. But because right now the Chinese domestic financial market is not so open, and it's difficult for us to provide enough liquid and high quality RMB denominated financial product to the outside investors. So which means this is also a dilemma for Chinese government. So I mean, to compare the potential benefits and potential costs, China's government they will continue to use a conservative or gradual way to internationalize the RMB. It is a choice of the market. It is difficult to be pushed by the governments or central banks.
Thank you, Dr. Zhang. Perhaps I'll ask you all a question just as we're getting closer to the end, which is, I mean, we focused a bit on a sort of factual question: is the hegemony of the US dollar under threat? Is it losing its position? But I suspect there's also a normative question here, and I'd be interested to hear your views on this, which is, does it make sense really for the world, for the global economy to really be reliant on one currency and one country to issue a currency? Does it make sense for the world to be reliant on US political situations, US political agreements, US business cycles? As I say at the beginning, there's a lot of similarities here with what you see debates in social networks and digital platforms about ideas about trying to make it easier for other platforms to gain scale and to take advantage of these network externalities. So I suppose my question is, we are where we are, but does it make sense for us to be where we are? Or should we be doing what some have suggested, and indeed Mark Carney has suggested this, trying to create a new global digital currency, something that's trying to do something different, which removes us from the reliance, if you like, on the US dollar and the US political situation, the US military situation, the US domestic political situation. So does anybody have any views on
that? Yes. Can I come in at this point? So it seems to me one of the fundamental problems with the current international financial system is that as Chris said at the beginning, the very mandate of the US central bank says that its decisions on monetary policy shall be based only on US domestic conditions and not on the effects of its monetary policy decisions on the rest of the world. So let me tell you a story. I was teaching at Princeton in the Woodrow Wilson School, as it was then called, and along the corridor was my colleague, Paul Volcker, who was no longer chair of the US Central Bank, and we had lunch from time to time. And at one lunch, I asked him, when you became chair of the central bank in 1979 and overnight hiked up US interest rates very much, which then led on to the great Latin American debt crisis, which led on to 1.5 decades of development crisis in Latin America through the 1980s and the mid-90s. Did you, at that time of hiking up US interest rates to curb US inflation, did you take any account of the effects on the rest of the world? And I was naively surprised, gobsmacked, in fact, at his reply. And he said, no. And I said, why not? And he said, well, the mandate of the Fed says we shall not take account of that, of such effects. And secondly, we didn't have the capacity to take account of the effects of our decisions on the rest of the world. And so we didn't. That was the end of the question. And it plunged Latin America into 1.5 decades of development crisis. So somehow or other, if the main international currency is also to be a national currency, that dilemma of national currency, national monetary policy has to be resolved. And I don't myself, not being an expert, see a way to do that.
I think that is the problem, isn't it? While ideally you wouldn't be that reliant on a central bank and a central bank's mandate, perhaps we are where we are in one way or another. I don't know, Sonia or Ming, do you have any views on that question? I mean, do you share? I suppose the question is, do you share that view that it's not ideal, the situation we find ourselves in, if you like, that we are perhaps here by default, that we have a global currency and we have a central bank that sets it with no regard, as Robert's just said, perhaps to the repercussions of its own decisions. Or do you think actually this situation has provided some stability, and that's the cost, if you like, of having a dominant currency?
Well, stability to who?
Well, true. That is a good question. That is a good question.
I would love to. Oh, good. I was just saying, I would love to ask Dr. Zhang not only that question, but also what clearly Robert has made so clearly, like there's a cost. Usually monopolies in any other field tend to benefit the monopolist. They think about themselves first. And this is obviously some kind of a monopoly. And so I would love to hear from Dr. Zhang about like, what would, instead of framing this like, oh, we replace the US dollar and for all those externalities, then it's going to be replaced by another sort of dominant currency. What would a world look like? What is possible to sort of aspire towards? Is it the digital universal currency? Is it like finding the equivalent of a multipolar world where we have the RMB for some things, the euro for others? What does he see as like a good way forward that doesn't basically replicate? It doesn't serve any purpose to replace one currency by another. In this, at least where I sit, Dr. Zhang.
Yeah. This is a very interesting question. But first, I want to make a quick response to the questions about the role of the digital currencies. So I think in the future, the digital currencies could make some challenge to a status of the US dollar, but the path will still be quite gradual, and we should not be too optimistic about this process. So right now, there are 3 kinds of these currencies in this world. One is a cryptocurrency, such as Bitcoin. So it's not a real currency because the value is fluctuates very significantly. So you cannot use it as a usual account, and no one will use it as a medium of exchange, and it cannot be a store of value. So it's just kind of the financial product. The second types of the digital currency is stable coin, such as the Libra. So for my personal opinion, I think the Libra has the most potential to challenge the US dollar's role because it combines the stability of the currency and not of the business things. Not of the for example, with the Meta, we can find lots of the things to use this currency, for example, in the visual world. But the project failed. So, and also the United States government is not so optimistic, do not support this plan. And the third is CBDC, central bank digital currency. For example, there is the ECNY for China, but ECNY is just, it can only replace the M0. So it's not it's just a retail currency. But a retail currency cannot challenge US dollars. Because most of transactions they are not used in the retail side. So if there is for Sonia's question, so if there are several international currencies, for example, the US dollar, the euro, the RMB, they have some benefits that also have some disadvantages. For the benefit, so different reserve currency, they can compete with each other. So if US dollar depreciated against other currencies and has very low yield, we can choose to increase the holdings of the euro and RMB. So which means by introducing kind of the mechanism of competitiveness, maybe the US government will feel some how to say, they have some constraints for their domestic monetary policy. But for the other side, if there's, for example, 3 international currency, the exchange rate between these currencies, if they fluctuate significantly, that will introduce new financial instabilities to this world. And in some radical scenario, for example, if there is some kind of stipulation between some international major institutional investors, they make a big transfer from the euro assets to the RMB assets. That will make some crisis. I mean, so this is there is an old debate whether what unipolar currency will be stable or multipolar the currency system stable. So I think we cannot not answer this question definitely. It's an open question.
Okay, well, thank you very much, and thank you, everyone. We've now just overrun by about 5 minutes, but I think it was worth continuing the discussion. Thank you to our 3 speakers, Professor Wade, Dr. Zhang, and Ms. Russell, for really excellent presentations, I think. I'm not sure where this leaves us, actually. I think we're perhaps continuing a discussion that has gone on for a few decades, but it's an important discussion. And I think, what we can take away from this is that while some believe the US dominance will continue for all sorts of reasons, that it survived the Vietnam War, it survived inflation, it survived all sorts of crises, its dominance will continue. Others are suggesting other ways forward and a more multi-currency system. But I think the one important point we can take away from the discussion today is that this question about currency dominance and the position of the currency is a really political question. It's not just about the finance and the economics. It really goes to questions about the global balance of power and how different states and countries work together. But thank you again, everybody. Really interesting presentation, and I hope that the participants have enjoyed it as well. Thank you. Bye-bye.
Thanks.
Bye.
Thank you.
Bye.